Hi, everyone, and welcome to another edition of Talking Sense right here on Yachting International Radio. My name is Ria. I am your host, and of course, my co-host, Alasdair Milroy from Breaking the Mould Accounting. How are you, Alasdair?
Ria, I'm really well. How are you?
Good. Let's talk about digital tax.
Previously or historically, you'd submit your return as a paper return or even as a PDF, and someone in the tax office would be manually taking the data you'd put on the form and entering it into the tax system to give you your assessment for companies or individuals. And this is really talking about what HMRC is talking about now is, and started implementing, in fact, it's already in place for VAT, is that you can no longer submit a paper return or a PDF return. The information's got to be produced electronically on a recognized accounting system and then transmitted to them in electronic format. And I know France has got a similar, I think even a couple of years ago, moved to a similar electronic format. You must have that data electronically. So that's what we're talking about. And from this year, so from 1st of April 22, if you're doing VAT returns in the UK, they have to be submitted electronically. And I think from next April, it's going to be income tax returns as well. There's some people calling for this to be delayed, but then other people are saying, no, let's just get on with it because it's inevitable, it's going to happen. But what it means, and I know there's plenty of European-based people who choose because they understand the company law, etc., to use a UK company. If you are in that position, and particularly if you're VAT registered, but even if you're doing a corporate tax return, you need to be moving, if you haven't already, to a accounting package which is Making Tax Digital ready, so that you don't find yourself next year not being able to submit your tax returns.
I don't understand why everybody's not doing that now.
No, it's amazing, and there has been a real shift in accounting over the last 10 years, but there's still probably a majority, but certainly a large minority, if not a majority of accountants who are still operating the way they did 10, 15, 20 years ago. And you see them once a year and you take your stuff to them and they'll prepare your accounts, prepare your tax return and give you a bill, and then a year later you see them again. And what we've seen is that modern accountants are really embracing this technology, which automates a lot of the paperwork, because you're getting the bank feeds directly from your bank, so you've got the transactions in there. You automate a lot of the extraction of data from receipts and your invoices, which then is extracted and taken straight into your accounting system. And so not only does that allow much easier end of year process, and that all the information is already in the system and can be sent to the tax firm, but actually gives your accountant the ability to be on top of your business and seeing your figures all the time. So for a business owner, it's really transformed how close that relationship is with an accountant, and gives them that financial information on how their business is performing almost live at any time of the year. You can see. So if if your accountant in that situation sees that you've got a credit control problem and a large debt, or whether there's in 2 months' time, you're going to have a cash flow issue where you're going to run out of money, you can address those problems now, not actually when it happens in 2 months' time and you potentially risk losing your business. So and in the current environment where we've got much bigger inflation, increasing costs, being able to do those scenario modeling and think is an added benefit of using modern technology to do your accounts.
Well, I mean, even if you don't have an accountant that works with you always, because my accountant, it's once a year, but it is all electronic anyway. That's how I get my stuff. That's how I send it to him. And I'm assuming that because I'm sending all the bills that were electronically sent to me via the same way, he is inputting that directly, or, bringing it directly into his program.
Well, it should be the same I mean, he should be looking at the cloud accounting. That's the whole ethos of it, is actually, instead of having you're delivering a cash book or a spreadsheet to your accountant, he's putting it into his system. you're all looking at the same information. So if you need to talk to your bank manager, or if you're looking at buying a business and you need to have some financial statements due, or even if you're looking to sell your business, that information is there, and your accountant can work on that at the same time as you are. That's where cloud accounting was such a game changer. And if you think about yachting, it's, if you've got a captain who's on a yacht and a family office and a corporate service provider, that's where having cloud accounting allows you all to look at that same data. It's becoming, there's massive advantages of doing that. But for UK companies, it's actually now going to be the only way that you can put your tax return on. So if you're not keeping this year's information already electronically, then you're going to have, come when tax returns are due next year, or even now, if you're not doing your VAT returns or you're about to become VAT registered, you need to have this information in a format that you can transmit it electronically to HMRC. And that
I guess it would actually make it easier for you to keep track of it as well, because it's right there and it's adding up and it's showing you all the details. So it's easier to keep track of, to know exactly what you're going to have to come up with at the end of the year.
Yeah, absolutely. And it allows, your accountant to work with you to say, look, you're doing really well. Your business is doing well, but that's going to give you a tax problem. Have you thought about, we could bring these, costs forward, or make this investment? And you can look at planning for that tax and being aware of it, and equally knowing that you're going to have that liability and putting the cash flow aside, because that's also, a lot of businesses do get into problems with not, there's a difference between profit and cash flow. So you think you're doing okay, and then you get your tax bill and it's like, oh my God, we didn't put enough money aside for that. And that has sent businesses into liquidation before, particularly with VAT bills. So it's really important to have this information to hand and be able to look at it, plan ahead, and work with an accountant on that basis. I think for any business, like leaving, you're increasing your risk if you leave it to the end of the year. The technology's there, it's meant it's much more affordable, and you can have that information to allow you to run your business. And tell it really, it's taking that information and giving you the story around what's happening in your business, which we all know data gives you a much better foundation for that than just intuition alone.
Well, you know what? If you have any questions about this tax law and you are a UK registered company, Alasdair knows everything there is to know about it, or as much as an accountant can, for sure. We'll include all of Alasdair's details below this interview when it airs, and I encourage you to reach out to him and get your questions answered.
Yeah, look, I'm really happy to take questions and help them where I can.
Wonderful. Once again, you've been watching another edition of Talking Sense with Alasdair Milroy of Breaking the Mould Accounting. Thank you, Alasdair.
Thanks, Rhea. Have a great week.
You as well. My name is Rhea. I have been your host. We'll see you again next week. Bye.